Hi and welcome to the Financial Fox. Today here with me is the well-known private investor Chris Hoyle. How are you, Chris?
Hi Steph, how are you? All right.
I'm fine. So in London, wheeling and dealing, what is up on the table?
Well, I'm back in London again. Wheeling and dealing as always. Seeing a few different oil companies because, as you know, my specialist subject for the last 25 years is oil and gas, mainly on AIM and the small caps. And that's what I really like.
But so why you have decided to to invest in oil, and why do you stick to it?
Well, I think one of the main reasons I like the oil companies is basically, with an oil company, there's going to be a rig, there's going to be catalyst events, and there will be results at the end of the day. With other companies on the AIM market, whether it's mining stocks or whether it's technology, or whether it's biotech, you don't really know when their products will come out. You don't know. It's all based on whispers of deals or not deals. Or what is nice about the oil and gas company is and mainly private investors can actually see for themselves a rig is coming to drill a certain oil prospect, and there will be news events. And the way to de-risk an oil prospect is always invest in the appraisals, which really, they are safer than pure exploration, because pure exploration is just drilling to find whether there's oil and gas, and that's normally up to 25%. But an appraisal is actually drilling an existing discovery. It might have been drilled back in the 80s or the 1970s or something like that, but there's an actual, the well is actually de-risked, and for the investors there'll normally be a CPR and a percentage. So really anything around normally 50 to 60 to 70% means there's a good chance that the oil or gas will come in. A bit like what's happened at the West Newton field.
Okay, I'm stopping you now, but obviously this requires quite some knowledge, lots of research. So in private investor, they actually have to invest quite actively. So they have to understand the project, and obviously it's always a risk, but there is a lot of time spent on researching as well.
Well, that's right. I mean, we always have to say there's always risk with AIM. It's not like going and putting your money in the post office savings account. But on the other hand, there are ways to de-risk and reduce the risk. And the main way to de-risk and reduce the risk is actually entering one of these oil companies, for example, at a very low price, knowing when to enter it at the lowest possible price, normally around funding, for example, or maybe other bad news that you can enter a nice well, which is an appraisal. And the other thing is basically, the other de-risk is knowing the chance of success. It's very rare. I've been doing this for 25 years. It's very rare that if you have a chance of success, well, over, I think, 50-55%, it doesn't actually come in. I think the only one in 25 years which hasn't is the recent Coulter well. That actually didn't. But in general terms, the higher the chance of success, if it's 70 or 60%, it's normally going to come in. The only risks attached to that kind of percentage is actually in the operation. For example, if you're on an oil rig and they accidentally, drop a pipe. I remember when I was investing in Exite in 2012 in the Shetlands in the Bentley field, it actually went up maybe 10 times my money, but there was heavy oil, and I remember, I think it was 80, I think the chance of success was 80%, but they were actually doing the operation in December, and the actual hose pipe fell off, and they had to do it in buckets, giant buckets around the actual oil rig in the end. But they got it done. But there is always risk in operation that can affect the share price. But in general, if you've got a high chance of success, for example, like West Newton, it will always come in general.
Okay, so this is another point. I mean, you are a private investor, an high net worth investor, let's say. You have quite a good capital available to, to invest in company. You're not going in for like 20, 30K.
No.
I mean, you do
Well,
much
we all
bigger
have
investment.
We all have to start off somewhere.
Oh, yeah,
You know what I
obviously.
mean?
You
I
probably,
mean,
what was your first investment,
well, I was
actually?
18 actually. It was I remember it was £5,000 at 18 in I'm just trying to think. I think it was actually something that I made a loss on. It was called, I don't even if you know it's called now. It was an investment trust. It was called AIM Investment Trust, which was supposedly just when AIM was created, right back in the early days, and it didn't do very well. And I thought, right, I can do better doing it myself, and that's why I started. So normally, when you start, it's normally through other reasons. You're thinking you can do better than these fund managers. So that's the reason it all started. But I've been, I've had bad luck and I've had good luck. I think I was in the right place, I think, in JKX when the Orange Revolution came in Ukraine back in the day, because I bought that company, made a bit. And then I went on because I like travelling. Obviously, that's what I mean. One of the things, basically, Chrysaor, is I like travelling, and I put my Twitter site is basically not. It's secondary if I give my personal research thoughts on my any kind of things I'm thinking of about in the oil world. It's actually my first primary job of the Chrysaor Twitter is the travel. And I put all where I go. I go a lot to the south of France and Monaco. I go a lot to the Cape Town. I go all over.
But let's go back to the traveling later.
Okay.
These JKX.
JKX Oil and Gas. It's
so
still
that
going
was
now,
good.
But it was they've been having a war with Russia, so it's not been so good.
Okay.
But I sold out very early on. But you don't want to hear how much I made. That would be rude.
Okay,
but I made a lot.
So another successful investment, or also we would like to know some losses that some bad investment that you have made.
Oh my gosh! I always learn from the bad ones. Well, the worst one must have been. I think it goes 2000. I'll tell you, it's 2015. I found the director used to work for McDonald's. And he was an ex-car salesman, and it was in oil and gas. I'm not sure if I'm allowed to say which oil and gas company it was, but it was based in Nigeria, and it was a complete con. But basically, that was probably my worst. But ironically, I invested in Afran when it didn't. That company actually went bust. But I invested in it when it went up 10 times, and I made some of the biggest.
So you
money
basically
I've ever
never
made.
had a big loss. You always managed to get out.
Well, yeah. In general, I've made losses, but I always learn from. I mean, this is the important thing. If you do make a loss, you learn from it, and that makes you a better investor. If you've never had a loss, that's dangerous, because actually losses. You analyse where you've gone wrong, what haven't you done, and you can take that forward when you go forward to analyse the next investment.
Okay, Chris, so now my question is, so you have quite a good amount of money to invest. Why are you choosing the small cap space rather than investing in companies that are giving dividends, much bigger? There are big oil companies,
yes, there are.
You always stick to, the little jewels.
Well, yes, but the little jewels turn into big ones. I mean, one of my first oil companies was Cairn Energy. That was tiny. They, ironically, like I said about the appraisals, they found all the oil in India and turned into a very big company. I invested in Tullow as well. That turned into a very big company, and both are now in the FTSE 250 or thereabouts, or FTSE 100. And, so the little AIM ones can turn into big ones. But the general reason why I like investing in the tiny small cap is, first of all, it's more personally for me, it's more fun, I enjoy it. Second of all, it's where the greater returns are, because it's the law of diminishing returns. You cannot, unless, I have vaster amount of money to put into a position, but you can make a better return investing in AIM, particularly with the because what I do is I use my own physical money. I don't use leverage or geared plays like spread betting. But what's interesting now, the whole argument of spread betting was you could actually invest in more bigger companies with better margins and spreads and all this, and make greater returns on leverage. But with the new laws that have come in, you cannot borrow as much as you once could. So, you know, the safer way for me personally, this is in my opinion and it's just for me, not for anybody out there, is in what is good for me is basically investing in AIM. That gives me the greatest return.
But Deb,
on
also,
capital.
but also on AIM and you know, small cap stock, there is I would say a community of quite very active investors. There is lots going on social media and lots of trolling as well. So
Yeah,
sometimes
trolling, yeah.
as a bigger shareholder, sometimes you get abused. You know, you get mainly because people are jealous.
Well, they are unhinged. I mean, I've got to say, the majority of people who invest in AIM are very good. There's a lot of institutions, but a lot of institutions are pulled out of AIM. So you've got people like Myton just about in, but apart from Myton, that's about it. The gap's being filled by people like me with, you know, because I'm one of the largest players on AIM. You know, I take huge positions in these different companies.
So you don't
now.
really care about, you know, the social media things?
Well, no, social media is in useful thing, but it's not. I mean, I personally use social media just to talk about my personal thoughts or research, and as I say, it's mainly for my travel now. But I mean, the social media is important from a company point of view to present to the retail, because the thing with AIM is a lot of AIM is retail, and you mentioned trolling a few is a problem on Cornerstone investors. Is that a lot of these people are unhappy because they've lost a lot of money in different investments, and what they should be doing is actually spending the time researching.
Yeah.
And actually, if they're doing, and then this is why I came back to what I was saying at the beginning of the program, is if they did the research, if they did study the chance of success of a well. I mean, if you put all your money into a high risk exploration success, that is gambling, because you're going to 9 times out of 10 lose all your money. If you put your money in a well that's drilling and it's a 70% chance of success, you can't promise it's going to come in, but the odds are in your favour.
Yeah. So you are happy at the moment?
Oh, I'm very happy.
The current situation?
Oh, I'm very happy. I'm definitely on, as you know, it's in the national press. I'm the biggest Cornerstone investor in the biggest well in UK history. So I'm very onshore. So I'm very happy. So
well, we will see what
we will see what happens. We will see what
be.
happens. But
so let's talk a little bit about traveling.
Yes, let's talk about traveling.
Okay, so which was the best place that you ever visit?
Ever?
Yeah. That is in your heart.
In my heart, probably Cape Town, actually. Probably Cape Town.
Okay.
Yeah. I like it. I like it a lot. I enjoy Cape Town. I think it's because whenever I go there, it's normally around the Indaba time, so I go there for 2 weeks, and actually it's normally miserable here in the UK because it's our winter,
Yeah,
so it's their sort of summer or their late summer, and you know, it's so lovely to get out of the miserable weather and to there, and also around because people think Cape Town, if you listen to the it's, you know, violent and you get chopped up, but you know, you don't. the front, the V&A Harbour, it's just like the British haven't left. It's all the Victorian harbour's still there, and all the high branded shops are still there, and all the luxury hotels are still there, and the seafood's lovely. The only thing I would say is, and the beaches are lovely. The only thing I would say is the actual beaches on this side, the water's cold, and the nice warm beaches, you have that wind that hits the sand and it goes in your face. But apart from that, it's great.
Okay, and I completely agree with you on Cape Town.
Yeah.
I really like it as well. But
Good.
what about south of France? There are lots of stories of you having fun in south of France in your 20s.
Yeah, well, I knew a few, people out there, and who've quite famous people, and I in Club 55 and Saint-Tropez and Cannes and things like that, and Monaco. So I don't know how much I should go into really, but it's a past life. So
it's quite international area, because you have got lots of fashion
the
as
Cannes
well.
Film Festival,
Correct. Then you have got the film. Then I think it's quite an international part of the world anyway.
Well, I have good memories, but as that's the good thing about life. It always goes on. You evolve and you move forward. But I am going back to Monaco actually in September. So
okay, so you still have a lot of friends
I have
there.
connections. Yeah.
Okay, that's good.
So, but I love and that's what I'm really passionate about. That's my Chris Hall Twitter is basically the primary job of Chris Hall's Twitter is for the travel.
Well, I think you should enjoy else. Because
you're people like to look at the different nice things, and that's what people. And it also encourages people, because I'm all about encouraging people. I mean, one of the things about at the moment, at times we're living with all this doom and gloom. You switch on the TV, it's hard to sometimes get up in the morning and think, oh my God, the whole country's going down. But actually, it's good to look forward to things. And, one of the main things I think the empowerment of actually investing in shares gives you is the ability to make money. And that gives you the ability to either travel, or I don't know, if your passion's travelling, or if your passion's doing up an old house, or if your passion's fashion, or whatever your passion is, or it could be old cars. I don't know, whatever you like to do. But basically, it drives that, and also once the important thing, and this is what people really should understand, especially talking to a lot of retail people, is once you make a certain amount of money, you don't then have to worry about paying bills. You don't have to worry about the actual your life. And then you can get out and enjoy things. And actually, the AIM market allows you, is one of the only places, if you work
you
hard.
Play right.
Well, it's all about researching. I think that's the thing. If you go on social media and you're following people and you just copy them like sheep, that is the important thing is to do detailed research into things, especially companies, and that will produce gains in the long run.
Okay, so Chris, I wanted to pick up your brain a little bit on politics.
Politics.
What's your feeling? What's your reaction to Boris as a new MP?
I was always taught
Brexit.
Well, I've always been, and that's one of the things on my Twitter side. I'm a passionate investor. That's what the main thing. I was always taught. On the dinner table, never talk about religion and never talk about politics, because it upsets everybody. Whatever your view is, there's a friend of yours with the opposite view. So I try and take both sides of the argument before I make any decisions on both things. But on the Brett, well, I mean, I know Boris has just come in.
Do you like him?
Well, funny enough, I like the speech he gave outside Number 10, but I thought that was quite positive. But we'll see. I just don't know. I mean, he didn't do too well on these cycle routes, blocking me going to the city from Euston. I think they blocked all the putting in these cycle routes. It takes me hours to get to the city from in my taxi now. But no, I mean, from that speech, let's see what he can do. I mean, we've got to get out of this mess we're in, and. But the important thing in my personal view, because I know this divides the country, so I'm not going to actually tell you whether I'm a Remain or out, but I can see both sides of the argument. But I think the important thing is to have a clear, we've got to do some plan and we've got to move forward. We can't. I think everybody agrees that we can't stay in this sort of
limbo,
linger forever, because it upsets business, and that's not good, really. Ironically, it hasn't really upset the stock exchange too much, but I know the pound's tumbling, and that's made the dollar.
But you're not playing with currency.
But I'm not really. I don't do currencies, so I'm not really into that. Really, I've never really been into currencies that much. I mean, I'm a passionate person on oil and gas. I always have been. I mean, I've also had, some friends and relatives and people who live near me have been involved in oil companies. So I've always been in oil. But there's a lot of people out there who are passionate about mining stocks. For some reason,
I think everybody.
There's a lot of people passionate about crypto.
Yeah.
There's a lot of people passionate about technology. There's a lot of people passionate about biotech. And I think
cannabis.
And some people do stick. That's the other thing. Stick to what you're good at. Stick to what you know, but don't move. If there's a new fad, don't necessarily go into it if you're not totally 100% knowledgeable on it.
Okay, Chris, thank you so much. You gave us some great tips and insights.
Yeah.
And I will see you next time that you are in London.
Well, probably yes. I look forward to it, Steph.
Okay.
Bye-bye for now.
Thank you very much. This is everything from the Financial Fox. See you next time.